Hey everyone, and welcome back to Hustle on Purpose. Today we're going to be talking about assumable mortgages. So if you've been paying attention to real estate recently, the term assumable mortgage is getting thrown around a lot. But what is an assumable mortgage? Basically, it's a mortgage that can be transferred to or assumed by the buyer from the seller. The buyer keeps the original interest rate, remaining payment schedule, and loan balance. Assuming mortgages was a very popular thing in the 70s and 80s when inflation was high and so were interest rates. Sound familiar to anyone? The popularity of assuming mortgages faded in the 90s and the early 2000s as low interest debt made it less advantageous, and some of the knowledge of the benefits has gotten lost. Hopefully the information in this video helps you to go out there and crush it, whether you're a buyer, seller, or an agent. If it does, please be sure to subscribe, share the video, like it, you know the deal. Now, under these high inflation and high interest rate conditions, assumable mortgages become attractive to buyers because they allow them to take over loans with lower interest rates than the prevailing market rates. Having an assumable mortgage is also an asset for the seller because they can market their property with this as a selling point. Now I can hear all of you yelling at me, but GT, what about due on sale clauses, non-assumable clauses, and loan qualifications? I hear you. I had some of these same questions. It is true that most conventional mortgages are non-assumable and include a non-assumable clause in them. Most of them also include a due on sale clause as well, which means if you sell the property that is collateralizing a loan, then the bank is likely going to politely ask you to pay that loan in full immediately. There are still ways to creatively navigate those deals, and if you're interested in that, I highly recommend checking out Pace Morby and his Subject To program. He's incredibly knowledgeable about that stuff and puts out a lot of great content on that. So with that being said, we are not talking about conventional loans in this video. We are talking about assumable loans, which you may be surprised to learn includes all U.S. government-backed mortgages. That is all FHA, VA, and USDA loans. During the past 3 years, these types of loans have accounted for 18 to 26% of the loans originated. So we're talking about a minority of houses, but it is still a large number of homes. I mentioned the loans originated in the last 3 years because if you are a buyer, this is the loan origination period that would benefit you the most. If the loan originated in the last 3 years, then you could assume a loan that is in the 4, 3, or even 2% interest range. You also want the loan that you are assuming to be as close to the purchase price as possible, as you will be responsible for coming up with the difference between the assumed loan and the purchase price, either with cash or through a lender that will take a second lien position on that property. Now, in that latter example with a loan in the second position, you will likely have a higher interest rate on that loan than the one you are assuming. But your blended rate between the two will still be much better than the originating an entirely new mortgage for the total purchase price at current market rates. If you're interested in buying or selling a home, I think it could benefit you to check out Roam.com. That's ROAM.com. At Roam.com, their goal is to match sellers with assumable loans to qualified buyers that could benefit from assuming those loans. Also, give Robbie Cole at Benchmark Home Loans a call at 501-777-9995. Robbie's the most knowledgeable person I know when it comes to these government-backed loans, and he would be happy to help you with questions like, is my loan assignable? Do I qualify to assume one of these loans? And more. Also, talk to your listing or buying agent to make sure they are aware of the info we discussed in this video so that they can better serve your interests. Like I said before, this hasn't been that popular in a long time. So unless your agent was doing transactions in the 80s, don't just assume that they know this stuff. Thank you for bearing with me as we did this quick dive into assumable mortgages. And as always, I hope this was helpful and informative for you. If you got something out of it, please be sure to share this info with someone who may need it. It also really helps our channel out, and we really appreciate all of your support. Now go out there and hustle on purpose. Thanks for watching. If you liked that video as much as we liked making it, be sure to check out another one. You've got one here. You got another one over here. If you want to listen to the podcast audio only, go check out the Spotify link in the description. And if you haven't subscribed to the channel, please consider doing so. It helps us out a ton. And please hit the bell if you want notifications anytime we drop a new video. Hope to see you on the next one.